Dom's had so perfectly encapsulated this notion that people were just positioned incorrectly, and now they're positioned to the other side of the boat when it comes to their outlook for earnings. So where are we right now in terms of how much the market has gone up in relationship to what people are expecting, the downward revisions on earnings that we've been seeing?
I think it's a mistake. I think earnings are going to continue to come in better than most people expect. We had a sell signal on this exact show on October 2nd. We identified the selling climax, one of the worst selling climaxes I've ever seen, that ended on Christmas Eve. We said the market was going to rally into the mid-February energy peak. It's mid-February. I'm looking for some kind of blow-off top this week and then an attempt to pull back, but there's no way we're going to retest the December lows.
No way. Amanda, would you agree with that?
No way.
The farther we get from December 24th lows, the more unlikely it seems, to investors at least, that a retest is in the cards.
Yeah, well, we absolutely agree that a retesting of the lows just doesn't make sense given the strength of the backdrop currently. I think the key question, though, is, what are investors going to be willing to pay for the growth backdrop that we're seeing this year? And so I see it very unlikely that the market gets back to sort of the peak valuation multiples we saw last year.
So what are you looking for in terms of valuation? What are you willing to pay for earnings this year?
Well, we've already gotten about 1.5 points of multiple expansion on not a whole lot of additional earnings growth. So we had expected coming into this year that really the market was going to be driven largely by earnings growth. I guess the challenge is sort of where we go from here. We've had such a strong start to the year. Certainly Q4 earnings season has been better than the consensus had feared. But I think as earnings season starts to wind down, some of the looming macro challenges are likely to come back into focus, certainly the trade negotiations, Brexit. And so from here, we don't think the path really to the end of the year is a straight line higher. We think it's likely to get a little choppy.
Jeff, we just got earnings out from Coca-Cola, and it's the outlook that's hitting the stock this morning in terms of a currency being a headwind, specifically strong dollar. And, the dollar, if you take a look over the past year or so, is up roughly 7%. Do you think that's going to be a headwind going forward for some of the other multinational companies that are exposed to international sales?
I do not, because I don't think the Fed is going to jack rates up that much in 2019. I think the dollar probably takes a rest here and pulls back a little. I don't think it's going to be a headwind. I continue to think earnings are going to come in better than the majority of people think. I do not believe in negative earnings for the first quarter of 2019. And I think people are underinvested because not many of us have seen a secular bull market.
Yeah, and to that point, Amanda, we got the Bank of America Merrill Lynch fund manager survey just the other day, which indicated that for the first time, I believe, since the financial crisis, people were favoring cash. I mean, they like cash, and their allocation to cash is the highest since the financial crisis. And so is part of maybe a next leg higher just deploying that cash, people being underinvested, to Jeff's point, in the market?
Well, I think that's the case. I mean, it's really hard to get excited about a couple of percent return on cash. And so we are not in the camp of saying that cash is the place to be right now. We do think there are a number of pockets of opportunity, but we would be using some of the volatility and movement in the market to sort of rebalance to sort of longer run strategic targets. We do like emerging markets. We do like mid caps. We think there's a lot of opportunity in infrastructure. I think in terms of the growth versus value split, we think there's more opportunity on the value side of the equation. So there's a lot of opportunity still left in this market.
The strong dollar doesn't scare you out of the emerging market trade, Amanda?
No, because we're definitely in the camp that we think the lion's share of the move in the dollar is behind us. And we're also in the camp that we think China's going to reaccelerate later this year. They put at least 63 separate actions sort of in place to reinvigorate and stimulate the economy. And so we think that this is a potential upside that the market's not currently appreciating. And so as goes China, so goes EM. So we think there's a lot of opportunity there.